Hi guys, welcome back to the YouTube channel. Today we're going to be talking about tax that applies and the tax considerations you need to bear in mind when looking at moving properties that you own in your personal name into a limited company. So there's two main taxes that are going to apply in this circumstance. The first is capital gains tax and the second is stamp duty land tax. So capital gains tax, that's going to apply based on the market value that you're deemed to have moved the property to your limited company over. So it's a market value rule that applies even if you say to, when you're actually selling the property or moving it over, you might do it for half the market price, you might do it for free. HMRC know that because you're giving it away to a connected company that you can't be trusted and you might fudge the figures to pay less tax. So what they do is they apply this market value rule. So that's one thing to consider. So if you've got a large portfolio that have got a number of properties and the gains are quite significant, what this is going to mean is you will have a capital gains tax bill to pay, but you won't actually have, you've not sold the property, so you won't actually have any cash to pay it. So that's one problem that you have. Of course, if there isn't a significant gain or it's your own main residence that you're transferring over, you'll be able to claim PPR. And also you've got your capital gains annual exempt amount at $12,300. And again, you've got one of this each. So if your husband and wife are owning properties, that's potentially £25,600. So if you do have one or two properties with small gains, that might not be a problem. But the way we get around this is by using incorporation relief. We've done plenty of videos on that in the past. Basically, if you have more than four properties and you can show that you work 20 hours a week in your property business, you can actually incorporate this, usually capital gains free. It's a complex area, so do speak with an accountant. Somebody like myself, we're about to advise you on the best way of getting a portfolio into a limited company where you've got a number of properties, such as you qualify for the incorporation relief. But if you've got one or two, that's what you need to consider, is that there will be capital gains tax to pay and there aren't really any ways to avoid it. I just want to take a minute to say about the consultations that we're offering to property investors just like yourself. So often you're working with an accountant who does your year end, and that's fantastic. You really get along with them, but you probably don't feel like they give you good tax advice. They're not tax specialists. Don't worry, you're not alone. What we can do in these circumstances is just give you one-off tax advice and work with your current accountant who's great at accounting, but not chartered tax advisors like ourselves. All you need to do to take advantage of this is go to www.jsmpartners.co.uk/tax-consultation. You can book in at a time that suits you, and you can put a whole list of the things that you wish to cover during a consultation. At the end, you'll receive a personalised tax plan that's going to help you pay less in tax and have clarity over your future. The second tax, the limited company is going to pay stamp duty land tax, also based on the market value when it acquires the properties. So if you transfer a property and it's worth £100,000, there'll be stamp duty on that, the 3%, say £3,000 in that example. Again, there's no actual way around this. So even if you're transferring in one or two properties, lower value ones, you will always be paying this stamp duty land tax rate in the limited company. The only one way around this is where you've got a property partnership and you're incorporating it. Basically, due to the quirks in the legislation, as long as you're roughly incorporating a partnership and then the share ownership afterwards matches up to the shares in a limited company, you can actually get your property portfolio into a limited company completely tax-free. So if you can use the incorporation relief and if you can use the stamp duty land tax relief as well, then that really is the best of both worlds in that there's no tax to pay at all. But for most people, there probably is going to be a small tax charge, even if it's the capital gains side or the stamp duty charge, if you are looking at transferring only a few properties or if you've not got a partnership. Whether it makes sense to transfer properties into a limited company, it's no one-size-fits-all solution here. Really, it's a case of looking at your numbers or getting an accountant, a tax advisor like myself, to do a full review of your circumstances to actually say, okay, you're going to earn this much income, you've got this rental income, but it's going to be taxed at this rate. Feeding all that into a plan and actually saying, yeah, you're going to be X amount better off because of this. Unless you've done that, you're not really going to know. So you basically can't wing this kind of stuff because you might end up paying more money in solicitors' fees, mortgage interest and tax if you start to budget. So definitely speak with your accountant, speak to a tax advisor and see if they can help. Hope you find this video useful. Please do give it a big thumbs up and also hit that subscribe button. Bye for now.